Hi, welcome back for more Tezos technical analysis. Let's just dive straight onto the charts and see what's been going on. Okay, here we are, starting off on the 24-hour Tezos versus Bitcoin chart. Now, is it Tezos? Is it Tezos? Nobody's told me down in the comments yet, so I'm just going to keep on pronouncing it whatever way I like. Right, looking at the Stochastics, the first off, we're slightly above the middle line here, but we've kind of ticked around slightly. As you can see, will they cross over and us look towards the lower side here? In terms of the RSI, we're up above the neutral area again here, looking towards trying to see if we can get in here and challenge this again and make it into the bullish control zone on our second pass. Same story as we've had a few times. We need to make it past the moving average on that one first of all. And on the MACD, this and this and this are our lows here, and but we're consolidating sideways. I'm not looking for divergence really. You can see that things are tightening up though, as this between the last two lows here. They've been getting higher, and between the last bits of the highs, you've been getting it smaller. So you can see the sort of shrinking on the MACD as things are obviously consolidating, and that's what's going on. And you can see we've got our measuring pole left on there from before to sort of designate where we could be potentially go and say we were to break out of it. But I'd be looking out for that to not actually take the full distance of its move anywhere. If it were to break to the downside, then $2 or 2,500 is the sort of this area where we potentially look for resistance. The full measured move would take us all the way down to 2,000, and likewise the upside. Anywhere over the next couple of days, you could be looking up above 4,000, but of course I wouldn't really be wanting to sort of push my luck that much on there. I'd probably be taking a profit around 3,700, but I'm not a financial advisor. None of this financial advice. There isn't anything to be learned in terms of divergences or whatever, like I was saying, because we're just consolidating, and I couldn't say that we're trending by going down the time frames either. Really, there's nothing really much to be learned there, so we'll not do that. Instead, we'll just look towards the sort of key areas. To the top side, you've got that 3,500. To the bottom side, you've got that 3,000, and this is where we're looking at over the next day or two to see if we're going to sort of push one direction or the other. I'll leave the measuring stick on the chart for now, stick it over here somewhere, and then we'll go over to the dollar prices and see the differential now. So over here in Coinbase, it's $2.57. Over here on HitBTC, it's $2.45. So that's yet again a 12 cents difference. Yesterday's video, the difference was less than a cent. So of course, this disparity of actually knowing what the price is between the different exchanges remains the case. 12 cents, and then if we look to that, the price currently $2.45 or so. You see, if you add 12 cents onto that, where does it take you to this serrated line here at $2.59, which is our sort of which is what we've been keeping our eye on for. We need the prices to move up above there in this sort of potential descending broadening wedge that we're looking at here, or downwards channel, or whatever you really want to look at, but it's all up to you. But let's call it that for now. Say it's a descending broadening wedge and say that we need to move towards the top side, and we've been supported by the 55 moving average here, the green line. So that's always good to see that we're sort of finding some sort of foothold of support. But of course, we need the prices to go up there. But there's this dynamic with the price difference. Let's look over towards Coinbase and see where the prices are higher by that 12 cents, and of course it's still also being supported by the 55. So there's certain technical type aspects where you can see on average the prices are working out to be the same, but you get these wicks and things as a result. Look at the wick there and the wick down below, and we go over here and you can see that these are two more like doji candles. Doji candles are dodgy, of course, whereas these here, as you've got your sort of your hammer, and what's the other guy, shooting star or whatever, the other thing, whatever. I hate the names. I hate those names of things. But you've got these different styles to what's going on here. So we're really on this chart, we're looking towards 279. Can we get above that? Get above the 382, move towards the 236, and of course go through the 21 moving average there, and our next sort of port of call for profit taking. I'm not a financial advisor, none of this financial advice, at $2.90, and try and move towards the upside and get this and actually make this into some sort of continuation pattern with a broadening wedge. Or are we just going to trend the downside? Now, of course, We are below the 236 here at $3.20, which means you do have to look towards the downside targets, and of course we remain below the 382 here at $2.70 or so. So we do have to continue to look towards these downward targets of $2.35, $2.30 or so, just in that 50% area, and indeed, of course, as well towards this golden pocket at sort of just underneath $2. So really, we'll be bearing those things in mind. Of course, we do know that at $2.30 we could find support like we have done in the last sort of just yesterday, when we were, so we bearing these things in mind. We know that they can happen. This is where the prices currently are. Where they'll shake out to be in the longer term is hard to say. We're in a bit of a downtrend currently, though, you can say that. Then therefore you can compare the lows during it and look for divergence and whatever, and there isn't really any, because you just can't see any, but potentially there could be some forming. You could have bullish divergence forming here, but to anticipate, as you see, not on the RSI but on the MACD and Stochastics, but to anticipate these things in advance, I will say, is very unwise. You know, it's not the prudent thing to do, and that can often, you know, get egg on your face as a result of doing that. But it's there, it could happen, you know. So if the prices go up and make, say for instance, we see over the next day or two the prices going to $2.95, for instance, and these things are still looking kind of how they are down below, then you would say, oh, we've got this, we've got bullish divergence there. So for people who were taking shorts at that point, I'd say, you know, caution you there, but I wouldn't be rushing into longs. It's more of a warning sign than anything else. Okay, so yes, thanks very much for tuning in. I spoke quite quickly. I hope I got the video done fast despite speaking quickly, hopefully 5 minutes or so. And yeah, and thanks very much for tuning in. Thanks very much for joining me, and I really appreciate all the likes, comments, subscribes, all that good crack, and share this video with any friends you have that you think might like it, and let's see where the future takes us. Thanks so much for tuning in. I'll see you next time.